The following data is taken from the annual report of Ford and GM from the years 2016 all the way to 2018. When looking at the total revenue for Ford throughout the last 3 years, Ford is increasing their revenue every year while maintaining their dividends relatively smaller than their competitor GM. The basic earning per common share is a portion of a company's profit that is allocated to each outstanding share of its common stock. Therefore, GM has a much better EPS ratio than Ford, meaning they are selling their stocks for a much greater value, which also attracts more clients to buying their share since they are looking for a greater profit. When looking at the total revenue of GM, their revenue wasn't increasing every year. Instead, it took a fall from the years 2016 to 17, and since then, it came back up for a over 1 million from the years 2017 to 2018. Still, its best total revenue was in 2016. One thing also to note from GM's dividends is that it has remained the same throughout the scope of the last 3 years.
Comparing the balance sheets of these two companies and looking into their assets, liabilities, and equity, the company Ford has its assets go down from the year 2017 to 2018, and liabilities and equity go up a little more than the past year from 2017 to 2018. The current ratio also drops from 1.23 in 2017 to 1.19 in 2018. The current ratio is found dividing current assets and current liabilities, leaving the debt to equity staying at the same for both years from 2.65 to 2.65. With GM Motors, assets increased from the year 2017 to 2018, also increasing their liabilities and equity over the year. The current ratio also has an increase from 0.89 in 2017 to 0.91 in 2018, giving the debt to equity 2.12 to 1.92, which is found dividing total liabilities over total equity.
So then our group looked at the annual reports for General Motors and Ford year of 2018. We looked at the two largest investment activities and the two largest financing activities for both of the companies. It was shown that both companies had a huge investment activities on the principal collections and recoveries on finance receivables. These numbers all go in millions. And the largest financing activity for both companies were on issuance of debt. The only loss that Ford had in their financing activity, which was on purchases of common stock. Overall, Ford had a larger net income loss of investment activities than General Motors did, and General Motors also had a greater net income for finance activities than Ford did. It is important to note that Ford is dealing with bigger numbers overall.
When making a decision to financially invest into General Motors or Ford, there are other significant important aspects to consider rather than just looking over financial documents or statements. For instance, as of April 29, 2019, General Motors has seen an incline in their stock value and are currently at 1.36%, while Ford has seen a decline and they're currently at 0.53% in their current stock in the past year. As an investor, having knowledge of the current stock level for the two companies is very essential and informative, as it shows the current trends of the two companies' current demands they have in the current market today. Another important aspect is to consider which company is not only currently thriving, but also which company is also growing. In this case, General Motors seems to be the company leading this area, but not only showing marginal profit and stock growth compared to Ford, but also physically expanding by adding a new 300 million plant and producing 20,000 jobs across 6 states in the coming years.
After reviewing both companies' financial statements, we can see that Ford's total revenues are a little bigger than General Motors, since Ford is in the $150 million range, whereas General Motors is in the $140 million range. Although Ford's dividends have been going up and down, General Motors has just been at a constant dividend rate of 1.52% from the years 2016 to 2018. After carefully evaluating all pieces of information, I believe Mrs. Klein should choose General Motors, since this company is constantly growing at a steady rate, but also making sure they're controlling their dividends and liabilities at the same percentage or lower. Ford is the company that has higher total revenue margins, but they have declined in their stock value, and their assets/liabilities have not been at a steady rate, since one year would be an increase to their company and other years would be a decrease. General Motors seems to be a better company financially, since it is going to continue to thrive every year at a steady rate, even if the profit margins aren't as big of a difference from the past year.